Well, good afternoon, everyone, and how have they been? We are on the new tax law series, which we started sometime 2 days ago. We took the introductory, that is the table of content, that is the series at which we at the rate at which we are going to be doing our explanations in chronological order, that is serially. So we started with introduction, then from introduction we went to what 18 key new changes in the new tax law. So that introduction element is what we are taking today. And what are we saying under introduction? We are not new to tax or taxes or tax legislation, and tax legislation has always been coming before now. Before independence, after independence, a lot of them after independence, and there have been a lot of differences and improvements as each tax legislation comes up. So this particular act has repealed. When we say repeal, it means it has cancelled the existing laws before now, or it's going to cancel the existing laws by the end of 2025, 31st December 2025. All the existing laws on taxes cease to what? To apply. The new tax law is very robust and expansive, comprehensive, so it's going to take in a lot of the previous tax regimes. So this act repeal existing tax legislations and consolidates legal framework government taxation in Nigeria. It provides for the taxation of income, transaction and financial instruments, as well as for what? Applicable exemptions and taxpayer incentives. What are we saying there? When we say tax legislation, what is the tax legislation talking about? Any tax legislation must be talking about the following. One, income. What is the income of an individual? What is the income of corporate entities? What is the income of organizations that are not corporate, that is organizations that are not doing business for purpose of profits? That is income. So the taxes will be talking about what constitutes income to them, and how is those incomes to be taxed. So that is one. Then transactions are what businesses we do across ourselves, individual to individual, company to company, organization to organizations, and across between countries and individuals in the country to other individuals in another country. So for business transactions, there are also some taxes that are applicable to that. Then financial instruments. What are financial instruments? These are some instruments that are taken up by businessmen or companies in the course of their businesses to guarantee or to secure some transactions. Example are bank guarantees, bank endorsed checks, and promissory notes. There are a lot of them, but the biggest example is bank guarantee, what they call BG. We also have APG too. So there are a lot of all these instruments. So whoever is seeking those instruments from finance houses will be made to pay some taxes as a form of cost for getting those instruments, because those instruments guarantees the transaction is intending to go into, or secures some facility is about to secure and stuff like that. So that is on instrument. Then we'll talk about exemptions. Exemption tax legislations will also take care of people that will be exempted from particular taxes, or transactions that may be exempted, or businesses that may be also be exempted, corporate entities that are into peculiar or unique transactions, or unique businesses that also may be exempted from taxes. These are what we mean by exemptions. And taxpayer incentives. Incentives has to do with it's not an exemption. Exemption means you are being removed or being excused from payment of a particular tax. What incentives means, before we tax you, we are giving you additional some allowances to be granted to you, or will be relieved. That is, some of your income will be removed from the total income, such that your revenue, your taxes will not be based on the original base income. It's going to be on what? On net income, after those incentives have been granted to you. So incentives can also take different forms. It can be cash, it can be in kind. If it's in kind, it's going to be valued. It's going to be valued and take the monetary value now taken into consideration when the tax is to be computed. That is that. Secondly, the Nigerian tax from now on, we have the Nigerian Tax Act, which is now going to be what we call it NTA. It's a comprehensive piece of legislation that seeks to outline all taxes in the country, either to administered by different laws and compress them into a single simplified law. What are we saying by this? Before now, we have different tax legislations. We have what we call personal income tax, which was taking care of individuals in employment and self-employed individuals as regards to what? Income on salaries, income on businesses of individuals. But we also have what we call company income tax, which was taking care of what? Taxes on the incomes of companies. We also have PPT, petroleum profit tax, which was taking care of what? Peculiar or a particular the oil and gas sector. Companies operating in the oil and gas with their own peculiarity was being taxed specially as distinguished from general companies that are being taxed under corporate income tax or company income tax. They also have what called CGT, capital gains tax. You have CTT, capital transfer tax. Well, then the last one was the Financial Act. So all these different forms of taxes was done with the intention of a particular sector, with the intention of a particular area of the economy, with the intention of a particular set of people or particular group of businesses and stuff like that. So, but from going forward from 2026 now, we have the new tax law. It has in a way harmonized all these different taxes, and will not be having what can call different types or different forms of taxes again. Rather, an embodiment of a single tax law will be taking care of everybody, all types of businesses, all types of sectors, all types of industries, and all types of organizations. So that and it's now going to be referred to as what? The Nigerian Tax Act of 2025. We used to also have what's called the Federal Inland Revenue Service. And we have the Federal Inland Revenue Service was the government agency, or is the government agency taking care of taxes that have to be paid to the federal government. Federal government in terms of the national governing body. So, and they have different zones, STOs they call it, stations and what have you, scattered across the whole country. And we are having what we call SIRS, to State Internal Revenue Service, taking care of the various states in respect of their own taxes. And because the Federal Inland Revenue taxes was inaugurated to be in charge and regulate federal government taxes, there are some taxes that were not under their purview. Example, personal income tax, which was under tax taking care of incomes of the individuals as employees and income of individuals as self-employed people. And the federal government was essentially in charge of the company income tax. So now the new organization to take care of all these taxes will be called what? Nigerian Revenue Service, which is now going to succeed the FIRS. It will have power to collect all national taxes, including royalties, either to collected by the what? Nigerian Upstream Petroleum Regulatory Commission, NUPRC. What are we saying? This NUPRC was also coming from DPR, the Director of Petroleum Resources. So this agency was mandated to be in charge of taxes that have to do with what? With royalties paid by what we call NOCs. That is national oil, the Nigerian oil companies, both multinational and local ones. So everything that has to do with their royalties being paid to the federal government was under the purview of what? NUPRC. From the new tax law, it means they will cease to collect such taxes. Rather, the Nigerian Revenue revenue service now will now be in charge of all taxes that have to do with the federal government. And also we also have what's called excise duties, import duties, VAT, and all these other forms of taxes that the federal government also collect. And that of import duty and excise duties was under the purview of the customs service. That is also going to be withdrawn from them, and the Nigerian Revenue Service will be the ones taking all those taxes too from 2026 January 1. Thank you.